What's up everyone? In today's video we're going to take a look at Amazon to see if this gem can double our money in the next 5 years. This is a full in-depth analysis including valuation, so sit back, relax and enjoy the video. Also, if you find any value in it, consider giving it a like. That's it. Let's waste no time, here's the format. In part 1 we're going to have a short business overview of Amazon. In part 2 we're going to discuss about Amazon's moats. In part 3 we're going to take a look at their financials. In part 4 we're going to discuss about management, and part 5 is going to consist of the valuation and the price targets. Let's start with part 1, the business overview of Amazon. I know all of you know what Amazon is, but what I want to share with you is the revenue structure to better understand the business side of the company. Here's a nice chart on the screen so you can have a visual representation of the revenue breakdown. The percentages and numbers are not the latest and they will change over time, but it's a good visual proxy to understand the business. Amazon's revenue is nicely diversified between online stores accounting for about 50% of the revenue, third-party reselling services accounting for about 19% of the revenue, AWS or Amazon Web Services accounting for 13%, subscription services about 7%, physical stores like Amazon Go and Whole Food stores about 6%, and other sources which are about 5%. Geographically speaking, from Amazon's total revenue, about 70% comes from the United States and 30% comes from the rest of the world, like the EU, Asia, UK, and other regions. I really like how Amazon has a diversified stream of income. While it's not very diversified when it accounts for location, because it's concentrated about 70% in the United States, when we look at the streams of income, you can see that Amazon is plenty diversified, and I really like that about the business. There are many countries, especially in the EU, that do not have affordable access to Amazon. For example, if I would like to buy something from Amazon, even if it's from Europe, I still have to pay a decent chunk for shipping. And in my opinion, this is an opportunity for Amazon to expand in the Europe and also in the rest of the world and capture more market share. Like for example, if I try to order something from the United States or from the UK, I also have to pay import fees and a significant amount for shipping. So as you can see, Amazon still has plenty of opportunity to expand geographically and acquire more market share. Moving on to part 2 and talking about the moat, in the Amazon's annual report, we can identify the core mission and the 4 main principles that Amazon was built upon. Those are important because they tie in with Amazon's competitive advantages, aka the moats. Amazon's core mission is to be Earth's most consumer-centric company, and the 4 main guiding principles are consumer obsession rather than competitor focus, passion for invention, commitment to operational excellence, and long-term thinking. To give you some perspective, these were the principles since inception, and Amazon continued to execute on those core principles relentlessly since its IPO in 1997. To keep this simple, here are the competitive advantages, aka the moats, that I can identify. The first one is a brand moat. Amazon has a very strong brand moat. Everyone knows about Amazon, everyone knows what Amazon is and what it can offer. Once you get hooked on the Amazon experience, it's no going back. That was my experience when I had access to it, at least. I mean, when I was in the United States, I had access to Amazon and it was game changer. If you are from the United States, Amazon is most likely a given. Prime is spectacular, and I see why so many people are raving about it, about Amazon, its brand, and how it treats its customers. Those core principles are highly ingrained in Amazon's brand. I had such a great customer experience with Amazon, like, oh my god, I cannot even describe it. Like, I am pretty sure that many of you can relate to what I'm saying. Another mode that I could identify was a pricing mode. Like, Amazon products are among the cheapest products that you can buy on the Amazon.com platform, and they're of decent quality too. This is driving a lot of competitors out of business, especially when Amazon is kind of combining its search function with ranking some of their products on top of the search results. The cloud computing services offered by AWS or Amazon Web Services are also very affordable, and so many businesses turn to AWS to use their services. Third mode that I could identify is a network effect mode, one of the most powerful modes that you can find out there. And basically, the more people use Amazon, the better the experience gets. This is not limited to the Amazon.com platform, but also to AWS, to Whole Foods, and the other products and services offered by Amazon. Amazon also has a switching mode. I mean, how many of you would be willing to cancel the Prime membership like right now? Not a lot, right? I believe it's going to be extremely difficult for people to give up the Amazon experience, the Prime membership experience, the AWS experience, and the whole Amazon experience in general. I mean, if you are from the United States, think about a life without Amazon and without anything similar to Amazon. Not so fun, right? Besides listing the modes, let's see if we can identify them in the growth of certain metrics like Warren Buffett recommends. If we take a look at the compounded growth rates for equity, earnings per share, revenue, and operating cash flow, we can see that the growth rates for 1 year all the way to 10 years are phenomenal, like from 15% to 50+%. I mean, that's very, very good. Like, not only we can identify and name certain modes that are surrounding Amazon, but we can also see that the numbers, the growth numbers of certain metrics are supporting the modes that we found around the company. What the modes and the numbers tell us is that Amazon is very well protected against competition, and it can sustain its future growth as well as it did in the past. Let's move on to part 3 and look at other financials to have a more complete picture about the company and its financial health. In addition to looking at the growth rates for equity, earnings per share, revenue, and operating cash flow, I like to look at the cash and cash equivalents, the current ratio, the long-term debt, and the return on invested capital. And about the return on invested capital, we are going to talk about in the management section. Looking at the balance sheet, Amazon is sitting on $68.4 billion of cash and cash equivalents. The current ratio, meaning the current assets divided by current liabilities, is 1.1. A current ratio above 1 is okay. Above 2 would be ideal and something that I was looking forward to identify and to see in Amazon, but with the current ratio of 1.1, Amazon is still liquid enough to cover the short-term obligations due within 12 months. If this would not be Amazon, I would be a bit worried to see only a 1.1 current ratio, because I would ideally like to see somewhere around 1.8 to 2 plus. But with Amazon, I have no problem. I mean, this company is a beast. Long-term debt is sitting at $32.9 billion, and it increased a bit since March, but in my opinion, this is no red flag and I don't see any problem with this. Considering how heavily is Amazon investing in growth and expansion, this to me is not that much of a problem. In any case, it is sitting at around 2 years of earnings. Below 3 years of earnings is still considered a good ratio of long-term debt to earnings. But if we also take into consideration the cash and cash equivalents, I don't see it as much of an issue for Amazon. I mean, the long-term debt is not as much of an issue for Amazon in this low interest rate environment. Like I said, I'm not that worried about the long-term debt, and I'm also not worried about the 95 price to earning ratio, because Amazon is heavily investing in expansion and technology advancements, and that's why we don't see a bottom line that's a lot higher than it currently is. Amazon is using a ton of money to reinvest back into the business to grow more and more beyond the beast that it already is. And I'd rather see this happening now in the growth phase and in the expansion phase of the business than when it's facing serious threats from competitors. I mean, Amazon can turn profitability on in a snap of fingers. Now, let's move on to part 4 and talk a little bit about management and return on invested capital. Return on invested capital is around 13% for the past year. The average 5-year return on invested capital is around 10%, which is alright, but could be higher. The return on invested capital is used to see how effective management, aka Mr. Bezos, is at deploying capital and compounding money. Ideally, we would like to see the return on invested capital around 15% or more, and we are looking at return on invested capital because it is a better proxy than return on equity, because return on invested capital also takes into consideration the long-term debt. And usually if a company has long-term debt, it's going to have a higher return on equity than return on invested capital. And considering the long-term debt of Amazon and that it's increasing over time, that is why we see a lower return on invested capital. In any case, I am not going to doubt and judge Mr. Bezos based on that number alone. He built one of the best companies in the world, and I am trusting his process. I mean, he's one of the most talented CEOs the world has. Judging the CEO based on the return on invested capital alone, especially when it comes to Amazon, I believe it would be a big mistake. We have to look at things into perspective, and we have to identify if the CEO is acting with integrity and talent. And considering that Jeff Bezos built Amazon into the beast that it is today, and it continues to execute on the core principles as well as it does, and considering the growth that it has and it will continue to have, judging his performance based on that metric alone would be totally misleading and unfair. Also, if you'll have the chance and take a look at the shareholder letters and at the annual report, you will see that they are written very, very well. They are very digestible. They are easy to read and understand. And this gives me a signal that Jeff Bezos, or the CEO of Amazon, is looking at the shareholders, and he also has a big stake in the company. He's the founder of the company, and all in all, I believe that Amazon passes the management test with flying colors, at least in my opinion. Finally, let's move on to part 5 and talk about valuation and price targets. And for the purpose of keeping this video beyond a few eons long, I will let you know the valuation metrics or the valuation methods that I use and the price targets that I get based on those valuation metrics. One valuation method I use is Philtown's margin of safety formula, and the other one is a discounted cash flow based on Warren Buffett's owner earnings formula from his 1986 letter to shareholders. To determine the value, I use some projected growth rates for Amazon. The analyst projected growth rates for Amazon are over 30%, but I assume that Amazon will grow between 25 to 30% for the next 5 years, and that in 5 years it will have a reasonable PE of 50 to 60. Now, with those projections for the margin of safety formula, I get a valuation between $3,936 per share to $6,992 per share, which would provide a margin of safety between 20% to 55% at the current price of about $3,200. For the owner earnings discounted cash flow, I get a valuation between $3,200 per share to $4,300 per share, which would provide a margin of safety between 0% and 30% at the current price of around $3,200. The numbers you see on the screen right now account for a 50% margin of safety, and that's why they are so low. If Amazon would only grow at about 20% for the next 5 years, and with an estimated future PE of around 40, then I would probably pay a decent premium for Amazon at the current price. So as you can see, this is not an exact science, and the more we know about the business, the better, because we can better determine its future growth and how much we can reasonably pay for Amazon in order to get a decent return of around 15%. If Amazon would grow at 25 to 30% per year, and if this growth would be reflected one-to-one in the share price and the market cap, in 5 years, Amazon would have a market cap between $5 trillion to $6 trillion. To give you some perspective, in 2016, Amazon had a market cap of $315 billion. And now it has a market cap of $1.6 trillion. And that's because they executed on an insane growth of around 40% for almost 5 years, not four, like for almost 5 years. But in any case, in order for us to get a 15% return on our money and to double our investment in the next 5 years, we would only need Amazon to get to a market cap of around $3.2 billion. Basically a double from here, double everything from here, double the share price and double the market cap. I mean, even though Amazon might only grow by 15% in terms of market cap and share price, internally the business can grow much more, around 25 to 30%. And that's why I always try to get a margin of safety, and I'm also trying to look to buy a business with the margin of safety embedded, because I want to be protected in case the company, or in case all the things will not go as planned. It is up to you to determine if the future growth and the future market cap is attainable for Amazon. And the more you learn about the business, the more you will be able to determine if such thing is possible or not. In my opinion, it's very doable for Amazon to double from here in the next 5 years, but it is for you to make the assumption or to make the analysis for yourself based on all the information that you have right now. Alright everyone, I want to thank you so much for watching this video. I hope you enjoyed it and you found it useful. If you did so, all I ask is to please give it a like and subscribe if you want to see more videos like this one. Feel free to comment down below your thoughts about Amazon, and until next time, take care, have a wonderful day, and don't forget that you are amazing.